So let me add add us to the presentation. Good evening, everyone. Welcome to Saturday Night Live and Rambling. I'm Clay, joined by E-Train and her lovely and gracious, sweet, kind, warm self. Yeah, we having technical difficulties in the other room, so she's going to join me side by side here tonight in the other broadcast studio. So
the main broadcast studio,
the heart and soul of it all. Hope y'all are doing well. Hope you've had a good week. It's good to see you. For those on replay crew, damn good to see you too.
Hey, Carson, hit that like button.
Carson's probably gone to get a scotch or something.
I think he's working. Or in Maine? No. What are you talking? Main studio. No, you goofball. Yep. MAIN. Oh, Carson, you got me all off track there. Did we know that it was Carson's birthday this past Tuesday?
We did not.
It was Carson's birthday.
Happy belated birthday, Bubba.
Yes, absolutely. Happy birthday, Carson. You little bastard. You didn't tell us.
And I am not singing happy birthday to you. You'll have to wait. I'll save that for
next year.
For in person.
In person. There you go.
Yeah. It's definitely not something we would want recorded and broadcast around the world.
Oh, come on. Hey, Melissa. Yes, Carson didn't tell us it was his birthday on Tuesday. I'm telling Melissa now. Thank you. Yes. You turd.
Yeah, for those that don't know, Carson is a regular on the show. He is the main distractor, deflector, derailer. Can't ever remember derailer. I don't know why, but he has some gifts in that area, and we enjoy him most of the time.
Yeah,
don't want him getting all cocky on me. Listening to the dog chew, it's kind of a weird little sound in the background. I don't think y'all can hear it, but Chunk has a piece of bull rawhide, and we won't describe the body part it comes from.
It's a bully stick.
It's a bully stick, but the damn dogs love it, and it's hard for them to chew, but they'll work on it for hours. So
the problem is he won't get in his bed. I have 3 beds laid out there for them to hang out in, and he's decided to just chew it against the hardwood floor instead.
So you may hear something knocking. House is not haunted. That's just Chunk being Chunk.
He's got 2 sticks and not letting Tallulah have hers, so she's laying by me. So I'm gonna put her bed over here.
She did and grabbed it from her. We have 2 of the most selfish dogs you have ever seen.
There's another one in there. Not here. Come here. Come here.
Carson, that's one way to describe it, actually. I'm just going to say a hard chew stick on the hardwood.
Carson, this is kind of going back to our conversation earlier, but I'm not going to bring that up.
I'm not even going to ask. No telling. No telling.
Anyway.
Tonight, that's a nice, smooth, even transition to the topic of the night show. Excuse me. Been a lot of talk, media coverage, etc. this week of Gamestop. The
hang on, Gamestop back again. Check it, direct it. Let's begin. That was it.
Yeah, I'm trying to think of the group that sang that. Let's begin. Party on, party people, not for DC. Now I'm going to be thinking about that damn song all night.
Here's noise. DC's in the house. Jump, jump for joy. There's a party over here.
Yeah,
Party
what's the
over
name
there.
of the band though?
I'm not a band person. I am not. Wave your hands in the air and shake it area. Oh, there it is. That was the song.
Yep.
Thank
I
you.
remember the song. I just can't think of the group that sang it. That's what's irritating. So GameStop, a meme stock, are often referred to as a meme stock. So what's a meme stock? Well, meme stock is a company or the group of companies that gains, it's kind of like a cult-like following on social media sites, particularly Reddit, for example. They are stocks that people buy not because of their cash flows or earnings or potential, long-term investment rationale, but they buy them because they want to send a message to, for example, the rich and the powerful, the hedge fund managers. What it boils down to, actually, is it's really nothing more than a pump and dump scheme. Maybe I should say a glorified pump and dump, where small investors are encouraged or incentivized to buy a stock, generating attention, which generates more purchases, forcing the price up and up and up to what most would consider ridiculous highs, whereupon reality hits and the price crashes, with the vast majority of the investors losing significant amount of money. That's why I call it a pump and dump. You'll see if you saw Wolf on Wall Street, the movie, Jordan Belfort, who was played by Leonardo DiCaprio, starts out in a little storefront operation, smile and dial. You've got all these guys working phones. They just call somebody up, launch into this litany of they've got the greatest thing, greatest opportunity since pockets on a shirt.
I think you did kill the chat, Carson.
Carson scared everybody off.
It's kind of like an insurance agent.
How so?
People on the phone, you say have the best, greatest product that you absolutely have to have, and might be selling a bill of goods. You don't know. They don't know anyway.
Yeah, could be. But they're selling little known companies. By little, these are what's known as pink sheet or gray sheet stocks. They're not traded on, a public exchange like Amex, New York, NASDAQ. They literally get their name because they were in a card file box at the back of the office and generally were on pink little cards, little mom and pop companies that somehow got a listed stock.
Sorry. There we go. Now we're on X.
We okay now?
Yep. Had to fix it. Sorry.
So anyway, these little meme stocks. Now, these are listed companies. GameStop's listed, AMC's listed, etc. But if you look at their cash flows, and we'll do that a little bit later, most of them would be considered to be dying companies. So it's not really the type companies that you necessarily want to take a long-term investment position in. It's a modestly entertaining event, but normally not the best way to invest. So, what led to this outpouring of enthusiasm and energy?
Sorry.
I'm going to send Ellen back to the other studio here in a minute.
I can't. I'll sweat to death.
So what led to this outpouring of enthusiasm and energy for a poorly performing company? Let me introduce to you, or to some of you, possibly reintroduce to you, a guy by the name of Keith Gill. His websites led to the first surge of these stocks, which saw GME, for example, GameStop, soar 8 times in 3 weeks. AMC was up 4 times. after which he went silent for 3 years. His last post in 2021 was of a kitty going to sleep. Well, up until a week ago, when this beauty was posted, now, this was all that was posted. Roaring Kitty is the account, The Roaring Kitty, and you have this, I don't know, it's almost a crayon-like drawing of a guy leaning forward and paying attention. It was posted at 8 p.m. on May the 12th.
Well, that's the first time since when?
Since 21.
When they did the first GameStop thing.
Yeah.
So now he's paying attention.
He's something has his attention. And keep in mind this date. We'll talk about and refer to this a little later. May the 12th. The funny thing was, this was all that was needed. People that followed his account hadn't seen anything in 3 years, all of a sudden just leapt into action. Did I mention something about a cult-like response? You know, when you see this, does this tell you to go out and buy GameStop or AMC?
Let me ask you this too, because back in, was it 2021 when the last stock for GameStop went crazy and then collapsed?
Yes, 2021.
Okay.
January, February 2021.
So most of the people, I know it wasn't the point, but most of the people lost a lot of money who put a lot into it, correct?
Yes.
Okay. Even doing the buying on that,
yeah,
that period.
The stock went up to nearly 400. I forget the exact price, but it went from a few dollars up to 400. It was only there for a very, very brief moment. But a lot of people bought it probably at the 150 to 300 to 350 range. It's where most people bought it. And once it hit 400, it crashed quickly. And so within a day, a lot of the people that had invested over the last couple of days, which was the majority, were in a negative position. And then it continued to decline back down into single digits.
And these were not wealthy people.
These were not wealthy people.
So that makes me think, because I know you're going to talk about this later. If this is AI and people are going to do it again, right? Why? Why fall for the same thing? Are they just trying to make people broke? People that bought it the first time think if they do it again, then they could make money this time?
Let me delay that question because we actually are going to address kind of some of that behind all of this.
So now he's been posting often. Okay,
yeah.
That was
here's the actual post. And then 4 years earlier, here's the post of the kitty going to sleep. Now, also note that while
magician, huh?
Yeah, GameStop was going, he posted, a few videos, and he also had a YouTube, and I believe it was a Reddit site. And he was posting on those as well. So keep that in mind. We'll kind of come back to that a little later.
Interesting. So, okay.
Now,
exciting person. He makes kitties go to sleep.
Yeah.
He wants to invest in green bean stock. I will. But I think I already did.
Probably be a better investment than GameStop. But now, also, since this year's run with GameStop, he has posted, I think it's 52, and you saw me scroll through a ton of them, 52 or 54 other videos. But the interesting thing is there have been no appearances on his other social media. He's got a YouTube site. He's got like I say, he was pretty active on Reddit. Nothing on those. Zero activity.
He just said he's live. Go up to his to where he was. Now, when it was describing him, it said that he was live like 2 nights a week.
Yeah, hadn't done that since 21.
Monday, Wednesday, Friday from 7 to 10 each. But he never showed his face.
After he put that sleeping kitty.
But did he show his
Nothing.
face before that?
Yes.
Okay, he did.
Yeah.
All right.
Now, looking at the investing in Gamestop, to most professional investors, this seems irrational, highly irritating. Suppose, you believe in what is known as the efficient market hypothesis. The efficient market hypothesis holds that stock prices reflect all available information at any given moment. So if the information on the company doesn't change, but the price starts blowing up, well, that just irritates the hell out of professional investors. If we look at, get this up, GME's stock price this past week, you'll see it was trading. And if I'd gone further back, this is only really pretty much for the week. If I'd gone back, it'd have been holding it around the $9 to $11 level for a while. And you can see it start to tick up. And then all of a sudden, here's May 12th when the announcement is made. Now, what you're looking at, these are high-low open close bars. The vertical line, each vertical line represents 1 day. The vertical line represents the highest price of the day, the lowest price of the day. The tick mark on the left represents where it opened. The tick mark on the right shows you where it closed. So each little day's bar representing each day gives you a fair amount of information. And if you'll notice, after the burst on the, actually it started, I believe the 12th was on a Saturday. And so trading started on the 14th.
I think that's the 13th. And there's the 14th.
Yeah. The big day is the 14th, and you can see where it opened and then where it closed. So once trading was made available to everybody, once everybody was, aware of it, they basically started losing money. And every day since then, the price has dropped below what it opened. So that's kind of an interesting phenomenon. Also, you'll notice the volume here before, the announcement. You can see the volume was just a sliver of trading. And then interestingly, the number of shares traded increases 2 or 3 days, 4 days before the actual post. Keep that in mind as well.
So if you bought before a few days before, if you bought on the second and then made that post and sold on the 14th,
you made a killing. Looking at, professional investors look at this and just roll their eyes. Calcagney, the CEO at Mercer Fund, describes these type of meme stocks as a mirage, pointing to the fact that the stocks aren't rising because of expectations of better earnings, better sales, better cash flow, any of that. It's just someone yelling the word go, resulting in extraordinary valuation multiples, which Calcagney calls, quote unquote, beyond Pluto.
But why?
We'll get to why.
Okay.
Now, if you look at the financials of the company. And I know this is a lot of stuff. Really, only thing I want you to pay attention to is revenue. So this is sales from 2018, 2019, projected all the way through 2026. And you'll notice one thing about sales from year to year, they decline every year, except for one, the COVID lockdowns. There was a temporary bump in sales for that. But other than that, sales have declined steadily and are projected to decline steadily.
Inventories have declined. Sorry.
Yeah, just it's, I could go into detail about some of this, but the main thing, what do you think the prospects would be as an investor for a company that sells less each year?
Not too good.
Yeah. It's not really a company that you won't want to put your money in. But you have tens of thousands of investors, mon-pa type investors, not institutional, individual investors who are dumping fair amount of money to them into company like GameStop.
That makes no sense.
Not as a rational investor, but
not even as a rational human.
But their motives are not purely rational. If you look at, GameStop, for example,
Now GME is GameStop.
GME
Okay.
is GameStop. Their revenues this past quarter were down to $880 million from $1.24 billion last year. That's a 30% drop in one quarter. That's just not a good trend. There's nothing encouraging in that. My point to you is that none of this, absolutely none of this, justifies the upward movement in price, much less to the degree that we all saw this past week, unless you want to lose money.
Who would want to lose money?
That's not what people think when they're investing, but that's why we talk about these things, is because I want to, encourage and develop a broader perspective in terms of investing for individuals.
May I ask a question?
Sure.
If you are an investor, even mom pa investor, right? And you've even looked up GameStop, you're going to hear about 2021. Correct? It doesn't take, it's the exact same playbook.
Yeah. My point is, well, yes. Okay. I thought you were talking about 21 revenues, but yes. Okay.
No, it's the exact same playbook.
Same idea.
Why would you buy into that having any kind of common sense? What is the bigger picture here? I'm trying to figure out.
Well, people just look at the price of GameStop going from 50 cents to $400 and they think, I can get rich quick.
No.
The motivation is almost always get rich quick. Plus, there's the motivation, the public reason for these meme stocks. Remember, I talked about how, they were kind of cultish in their behavior. And I'm not trying to be insulting to GameStop investors. I just don't know of a better word to use to describe it, because you've got one guy that none of them knows, that hasn't been on his Twitter site for 3 or 4 years, and he posts a picture of a guy leaning forward, and all of a sudden tens of thousands of investors leap into action at the first available opportunity and start buying the stock, which wasn't even mentioned.
This is my problem with this. Okay. This is my problem. I know I'm more of the conspiracy theorist than you are. And in the past few years, a conspiracy
That's not a bad track record.
That's proved 6 months from now. But seriously, you put up a meme of a guy paying attention. People go and buy GameStop stock, which didn't work out the first time. And they do it again. is this, and I don't mean to be, is there some group that needs to make money, possibly against the United States? I don't know. Is there a way that they're being, I mean, I'm going way out there now on the conspiracy theory that they need to make money now. They need it now. GameStop is just a stupid stock to buy. No one would do it. Are there funders that have some nefarious? That's
I mean,
what I think.
that's always possible. I can't prove anything.
No, that's just my own internal dialogue is going, there's something really wrong with this.
But we'll look at motivations a little later.
Okay.
Carson, I fell behind a couple of minutes.
The last one.
There are times when locking in a loss can be beneficial for tax purposes. It may save you some taxes. If you have $100 loss and you're in a 20% tax bracket, it'll save you $20 in taxes. But I'd rather have that $100 than the $20. But yes, you can write it off on taxes.
And Carson, I don't think it's an irrational mind that does this. I mean, anybody who follows the exact same thing, fool me once, shame on me, fool me twice, or fool me once, shame on you, fool me twice, shame on me. It makes no sense. It makes no sense.
Well, we'll talk about motivations a little bit later. No, that's fine. Carson, I think meme stock's a good name. Memes are often known for becoming viral. They're popular for a while, then they fade away. I look at it like memes have entertainment value. The trading in GameStop is kind of fascinating to me. And, we'll look at some of the reasons why tonight, but it's entertaining. I'll give it that. Ellen, are you trying to think about this from the perspective of a rational person? You can't approach irrational people from an irrational frame of mind.
And I understand that.
And I'm not saying these people are irrational.
I don't think they are.
But I will say they didn't exactly use a lot of reason in making this particular investment. That's a subtle difference. And we've all done things kind of off the cuff or on a spur, or because we were scared of missing out on an opportunity. We tried to jump in, and it ended up being modestly painful when after all was said and done.
And in my humble opinion, people who are in the situation of inflation, like we all are now, they don't typically throw good money after bad. They don't typically try,
or they may be more
gamble it,
or they may be more desperate to try to get out of the hole that they keep digging deeper in every month.
But then they're just still in it. I mean, they're not getting any better. That's just insanity.
And I see credit card debt being racked up, and defaults are rising. So why are people continuing to spend on credit cards? Maybe it's because they realize they can't pay it back, and they figure if they're going to have to bankrupt, they might as well do it big. Go out in style.
I mean, go big or go home.
Yeah. So there's a little bit of that attitude fueling it, I think. Again, I can't really judge people's motivations. All I know and see are the numbers, and that's really all I talk about. As far as the individual motivations, I can't judge, and I don't judge.
I'm the conspiracy person.
Yeah, it's not really conspiracy.
It's just trying to make sense of what's going on.
Yeah.
I think
I can offer occasionally some possible intuition, but that's all it is. It's just possible explanations. And there could be things I don't see, don't realize, don't appreciate, haven't experienced, whatever. Everybody makes bad investments. If you're in the market, you will have bad days.
Awesome.
Just as people can have bouts of temporary insanity, they can have bouts of temporary irrationality. Mm-hmm. Well, I alluded to the efficient market hypothesis earlier. And believe it or not, I am an academic. I do tend to teach some of this stuff. Yeah, really. And the efficient market hypothesis, again, the market's normally efficient, pricing in all available information. Well, What drives that efficiency? What forces the market to be efficient? There are three main forces. First one is that investors are rational. By this, it means that investors see information, cash flows, earnings, whatever, and they analyze it in a rational manner, and they come to a rational decision, and, they'll buy or sell the stock based on what that price should be. It's a rational process. Well, the second force driving it, and this one's my favorite, is that people are irrational. And you think, how can irrational people force rational market pricing? Well, what's a rational investor? A rational investor is somebody that consistently
rational first.
I am
versus irrational.
Irrational investor is somebody that consistently underprices a stock, undervalues a stock, or consistently overvalues a stock.
Okay, Jim Cramer.
Okay, let me finish.
Sorry.
An irrational investor is somebody that consistently undervalues a stock or consistently overvalues a stock. And you think, how can those lead to a rational price? Well, if we assume the irrational that undervalue are the same number or about the same number as the number that are consistently overvaluing, where do they meet?
In the middle.
In the middle at the rational price. So the second force driving rational pricing is irrationality, which I find kind of hilarious, if that makes sense. The third main force would be arbitrage. You see a difference in pricing in the same asset in different markets, like Mercedes-Benz might be trading on the Berlin exchange and the New York exchange. Well, that price, after accounting for currency exchange differences, one of them's higher than the other. So you simply sell the high and buy the low until that price reaches the equilibrium price, reaches the rational price. So those three forces are what force the markets to be efficient.
So it should all wash out in the laundry.
It should. Doesn't always. Yeah, Jim, get it wrong all the time, Cramer. He has a reputation that he has labored hard to develop and maintain.
I'm glad we could make you laugh, Carson.
Now, when you see this kind of price rise to the degree that we have witnessed, why would people invest when the revenues are dropping, the income is dropping, cash flow is dropping, projections are all bad,
and they've been here before.
Why do people invest? Why the ridiculousness in the valuations? All I can think of are the .com and the subprime bubbles. You remember in the .com, there were companies like AOL. Y'all remember dialing into AOL? You had the dial-up modem. For some of those of y'all that might be a little bit more mature.
I think most of our audience is pretty mature.
Yeah.
I think we all remember.
They had no real market to expand to. They were offering no real innovation. They were pretty much, it's kind of like Coca-Cola. Where's Coca-Cola going to grow? They're not. They're in every market. They've got 200 products. Are they all of a sudden going to greatly increase their cash flow by offering another version of Coke? No, not unless they put real Coke in it, but that's a different story.
But they actually tried that a couple times.
That's how they started.
I didn't mean to disparage Coca-Cola by saying they're actually putting cocaine now. I just meant they tried different versions of Coke.
Yeah.
And it did not help their bottom line at all.
Yeah.
Sorry.
So in the dot-com bubble, you had companies like Global Crossings was valued at $220 a share when it had no operations, it had no cash flow, it had no business, zero. It was just a website, $200 a share. Well, of course, it crashes down to zero, never to be heard from again. And that was common in the dot-com bubble. People just over enthusiastically throwing money at something they thought was cool and would rise forever. That never happens. Simply never happens. Subprime crisis. People, insurance companies, investment companies, all were operating under the assumption that housing prices would never fall. What a stupid, absolutely stupid assumption. Absolutely stupid. And we paid for it. So it's very possible for people to get too excited, to overvalue their own abilities, to overestimate the current opportunity. That's pretty consistent in human nature, actually. And that's what we have to kind of fight as investors when we look at potential investments. Now, in this market, we've seen stupidity. Comment? Question?
Lots.
Okay.
Okay. 2021. You see this happen in January? The first
Gamestop. Yeah.
What happened in January 2021? In the United States, that was major.
COVID?
That was 2020.
Oh, Jan 6?
After that,
I don't know.
Biden became president and he opened the borders.
Yeah. And
we have these, what do they call them? NGOs, non-governmental organizations, right? Who are support. I'm just saying, this is my weirdness. NGOs who are paying for people to come into this country. And there is a lot of speculation. Even Christopher Wray said, we're in trouble. We have no idea what kind of threats are going on right now in this country, right? And so now, before the election, beginning, end. Now they did it again. Somebody is making money off this, and it is nefarious. I'm telling you, it's not just stupid, irrational people. There's something to this.
We'll look at that.
Tell me I'm
so
wrong.
the idea is that, what goes up always comes down. You don't know exactly when the house would come down. You don't know exactly the rapidity of it or the depth of it. In the subprime crisis, the dot-com bubble, I knew both were bubbles. I did not greatly appreciate exactly how fast and how deep and how expansive that crash would be. I don't think anybody did. We knew it'd be bad, but it was worse than bad. Kind of have that same feeling now. When I look at the market, whenever there's bad economic news, the market goes up. It's like the main investors, the institutional investors, are so desperate for the Fed to start free money again, QE, that they want bad news, so that the Fed has to start up QE again, provide more and more liquidity, free money. People like guaranteed returns, guaranteed strong returns, regardless of what damage it does down the road. The now is everything. And that's the way society and investors are, increasingly evaluating investment opportunities. The now is everything. And historically, that is the precursor to a lot of bad decisions. So what's the motivation? Ellen's, kind of hinted around at some different things. What's the motivation for this type of investing? Is it simply masochism? Do people simply have a desire to hurt? No, there really is a pretty clear motivation if you look at the comments of a lot of the investors and the quote unquote encouragers of this movement. It's a desire to strike out at rich people. Many in the middle and lower economic classes think, perhaps rightfully, that the rich, the institutional investors, rig the game. The target for this kind of investing is largely hedge funds who manage the assets of the rich. So, how does this meme war target the rich, target the hedge funds? Well, to understand that, I'm going to have to digress for a minute here and explain to you how hedge funds invest, or explain to you a common strategy that hedge funds use to invest. This strategy is called shorting. Now, shorting is something you can only do in stock or bond markets. It's selling a stock you don't own. Now, you can't do that in real estate, for example. Imagine driving around a nice neighborhood or beachfront property, whatever, with your significant other, and they comment about how they like a house. And you look at them and go, perfect, I'll sell it to you. Well, you can't do that in real estate, but you can do it in stocks. You can sell stocks you don't own. So how do you sell a stock you don't own? Well, I mean, in order to sell something, you have to deliver it to that person. So you have to, in essence, take possession of that. You have to deliver the item to the buyer. How do you deliver a stock you don't actually own? Well, you can do it by borrowing the shares from somebody who does own it. I'm going to throw up this graph or picture that kind of represents what a short sale is. And it's really pretty simple. You basically borrow shares from somebody that owns the stock. You sell those shares and you deliver those shares to the new investor. Sometime in the future, you will buy the shares from the market and repay your loan to the investor that you originally borrowed them from. That's shorting. So it's not really a terribly complicated process. Now, shorting a stock you don't own. If you own a stock, you're said to be long that stock. If I own Apple, I'm long Apple. That's just terminology used in the market. I'm long Apple. I own Apple. If I'm selling a stock I don't own, I'm short Apple. I'm shorting Apple. So if you own assets, think about this. If you own an asset, you make money by that price increasing during the time you own it. If I own a stock at $50, if I buy it at 50, it goes up to 100, I make $50. Long that asset. I want the price to appreciate while I own it. Shorting is just the opposite. You make money by that asset dropping in price after you sold it.
Excuse me.
Ellen needs to go powder her nose for a second. Take care of the dogs. Handle some crisis. So in shorting, you make money if the price drops while you own it. So in the stock market, you can make money if prices increase. You can make money if prices decrease. Either way. The only way to make money, and you've all heard this term, is to buy low and sell high. Buy low, sell high. But there is nothing in that sentence or advice which determines the order you can do it in. If I can sell the stock right now, here today, at a high price, and then buy it back sometime in the future at a lower price to repay the loan, I make money as well. It's a pretty sweet deal. Now, if I'm long a stock, if I own a stock, my risk is that the price goes down while I own it. If I'm short a stock, my risk is that the price goes up while I'm short it. The more it goes up, the more I lose. Okay, I hope you understand a little bit better about shorting now. Back to hedge funds. A common strategy employed by hedge funds is to short stocks. And if it's shorted significantly, you want the price to fall if you're a hedge fund. If it's shorted significantly, that kind of becomes a self-fulfilling prophecy. And this is an interesting or fascinating topic to me because it's a topic I'm actually published on. Actually did some of my dissertation research on it. The first article I had published was an article called Naked Shorting. The Naked Truth, Examining Prevailing Practices in Short Sales and Resultant Voter Disenfranchisement. This is, well, to give you a Cliff Notes version, naked shorting is just shorting on steroids. The paper was the first to detail the process of this naked shorting and being able to do it to drive the company bankrupt. To drive the company bankrupt. Remember, if you're short a stock, you want the price to go down. Then you have to borrow the shares, buy the shares sometime in the future to repay the shares you borrowed. Well, if those shares actually go to zero, if the company bankrupts, you never have to buy them back. So it's like your loan being wiped off the books. You get to keep everything you made from the sales price. So to give you an example of how this works, suppose I want to short 100 shares of a company. And this company, let's say for easy math, only has 100 shares outstanding in the market. So I borrow those 100 shares and I turn around and sell them to somebody else. When I do that, how many shares exist in total? Well, you've got the guy I borrowed them from that owns, legally, he owns 100 shares. You've got the person I sold them to who legally owns 100 shares, entitled to all the rights and privileges thereunto. So 200 shares exist, where originally only 100 shares existed. I've effectively doubled the number of outstanding shares from the perspective of the market. To the company, they've still only got 100 shares outstanding, but there are 200 shares trading in the market. Let's extend that a little further. Suppose I want to short 200 shares now. Well, I can borrow 100 shares from the person I borrowed from originally, plus 100 shares from the person I sold to. So I can short another 200 shares to other investors or another investor. If I do that, how many shares are now outstanding? Well, the 200 I just sold plus the 200 I had previously shorted or borrowed. So now there are 400 shares outstanding in the market. From the company's perspective, they've still only issued 100 shares, but 4 different investors own 100 shares each. Does that make sense? Everybody following me? Supply and demand is still a law. So when I am using shorting to quote unquote increase the supply of shares, well, supply and demand is still a law. What happens to the value of those shares? It falls. So that's naked shorting. I'm borrowing shares that don't actually exist. In what's I will call legal shorting, you should actually borrow shares that existed originally. So there should be, by law, kind of a limit on the number of shares you can borrow. There are ways around that. So 400 shares outstanding. Each is an owner with all rights. Me selling those shares over and over again drives the price down. It's like I have an unlimited amount of shares to sell. And if I have an unlimited amount of shares to sell, I can literally choke that price down bit by bit by bit. Normally if a stock price drops, a lot of investors will see it as becoming cheap. So they'll start to buy it and kind of form some resistance level that the stock drops and then bounces back up again. But if I have an unlimited amount of shares to sell, when I see demand increasing, I just throw out more shares. And so the price doesn't rise, it continues to drop. And so people quit buying those shares. And I keep pumping new shares out. The price continues to drop. Done to this extreme, naked shorting can and has put companies out of business. You have to keep in mind, many startup companies have the value of their equity tied to loans, tied to money that they've borrowed. So if the value of that equity drops, the banks will call the company and say, you've got to pay off your loan. You don't have enough collateral. Well, they can't pay off the loan. So their only choice at that point is to declare bankruptcy. And at that point, the people who have shorted the stock are jumping for joy because they are now in the clear. They never have to buy the shares. They get to keep all the money they received from the sales. Never have to go out and buy the shares. That's free money. I vaguely, for example, and I don't remember the exact numbers, so don't hold me to these numbers, but I remember a company back in early 2000s called Eagle Tech. Eagle Tech tried suing a number of banks and brokers. Well, I don't know why that started up. Hold on a second. So here's a part of a text, and I probably ought to get one of the well-known LawTube attorneys, jumping in on this. But Eagle Tech sued. They started out suing a fund, Bromere, I believe, if I remember correctly. But long story short, they subpoenaed, and again, don't hold me to the exact numbers. They subpoenaed probably 10 of the major brokers during that time as far as how many shares they had on their books. And each broker, responded with how many shares they had on their books for all the different accounts. And just with these 10 brokers, Eagle Tech added up something like 24 or 26 million shares. Well, Eagle Tech had only issued 1.6, 1.3, I forget the exact number, million shares. But it was a huge number over and above what they had sold in the market. And when you have, 20 times your stock circulating in the market, the price is going to be a fraction of what it should be. And the shorters literally forced Eagle Tech into bankruptcy. Now, the courts threw out their suit for various and sundry technical reasons. That's where I would love to get some of the, comments from, LawTube. I won't go into all that. But that's just kind of a general example of how this shorting can literally destroy companies.
Hey, I was still watching.
Welcome back.
Thanks.
Now, when I first published this paper on the naked truth, there were people in academia,
Melissa,
who told me that simply didn't exist. Simply wasn't happening. Sounds like a trap, Melissa. Very much so. Very much a very real trap for startup companies without a lot of resources and loans where they have pledged equity as collateral. Huge risk to those firms who should not be exposed to that kind of risk. Well, published Naked Short, and attention increased on the issue. So the SEC finally came out with a regulation called SHO. That's literally the name of it, Regulation SHO, in an effort to address the failure of the SEC to regulate naked shorting, this endless shorting of shares. I remember, Mark Cuban, for example, denied that naked shorting was ever possible. I always wondered how much money he was making off of naked shorting, but that's a topic for another day. Well, the second paper I had, and here's a basic copy of it. The efficacy of Regulation SHO in resolving naked shorts. Had kind of an interesting history. It was reviewed in Senate testimony concerning SEC regulations on this issue. It was used by the GAO to audit the SEC in promoting Regulation SHO, and was discussed by the SEC's Director of Compliance at the major finance conference that year. Was also used by several petitioners suing the SEC as evidence and in their petitions. Was used by the ECU in evaluating short sales regulations. So kind of an interesting little paper. It was also interestingly cited in a Gamestop publication.
What?
Yeah, the Gamestop conspiracy, widespread loss of faith in U.S. capital markets. This guy cited the paper. Addressing specifically the GameStop issue. So just thought I would throw that out for tonight. So it got some mileage and has gotten some attention. I just had somebody email me the other day asking for a copy. It is published, so I literally no longer hold the rights to its publication or distribution.
So you can't put it on your Twitter or anything?
No.
Well, that's crappy.
But there's probably some PDFs out on the internet that you can find, possibly. Not that I'm advising anybody to go Google for extraneous copyright material, but
can you put that link on
No.
No.
There's a conference in, was it Macau or Malaysia, in which the paper was featured. So I guess my hope is that this latest round with GameStop will give me a few more sites. Shamelessly plugging my
Don't hurt
my
yourself
research
by
here.
patting yourself on the back.
The idea is that hedge funds often use shorting to enhance their portfolio returns, whether they do so by naked shorting or regular shorting, yet to be determined. So But that was kind of the goal of the meme stock. The GameStop investment was companies trying to blow up some of these hedge funds. I mean, individual investors trying to blow up some of these hedge funds who had excessive short positions on GameStop. The idea of the meme stock was to raise the price of these affected stocks and put a hurt on the hedge funds. So begs the question, how'd they do? Well, many reports in the media have the hedge funds losing nearly $1 billion the first day of trading. Here's an article by CNBC, identifying at least $1 billion. And I would say that's probably a little conservative, but can't say that I have greatly superior information. Now, remember, short sellers are hurt by the price rising. So if you've got a thinly traded stock, a stock that's not heavily traded, a few investors jumping in on it can start the price moving. Well, other computers, algorithms, other investors see the price jumping unusually. They start piling on, jumping in. So the price, goes higher and higher until absurdity is reached. And all of a sudden, everybody starts bailing. So if you're a hedge fund and you have a short position, this is kind of beautiful. If you have a short position, the only way to cut your losses is to buy the stock, which forces the price higher. There's some sort of poetry in there if you hate shorters. I don't really hate shorters. I hate the naked shorting. But I think shorting has a valuable role in maintaining fair prices.
I realized I wasn't here earlier. I was listening, but I didn't get all the things. So naked shorting, just a quick, brief a definition.
A concept. Naked shorting versus what I would call lawful shorting. Lawful shorting is where you go out and where you go out and borrow shares issued by the company. Mm-hmm. Remember, in my example, I borrowed 100 shares from an individual who had purchased them from the company. That's what I would refer to as lawful. Then I sold those, and there were 200 shares outstanding.
Meaning?
Well, the 100 from the individual that I borrowed them from, he legally owns those shares. Mm-hmm. And then the individual that I sold the shares to, they legally own 100 shares.
So it created a whole nother 100 shares.
It created a whole new 100 shares artificially.
Blows my mind. Yeah.
Well, I would refer to that as legal shorting. Mm-hmm. But now I want to short 200 shares. So I can not only borrow again these 100 shares.
You can take those back.
I can take these and borrow these and short another 200 shares.
Now you got 400.
Exactly.
Gotcha.
That's what I call naked shorting when I'm borrowing synthetic shares.
Gotcha. Okay.
I'm creating artificial shares.
That can just screw the whole pooch.
Yes.
Okay.
That's a problem.
Yeah.
Now, I was talking about hedge funds having to close out no, it's okay. It just takes me a second to get my thoughts together. Talking about hedge funds have to close out their short positions by buying the stock, which drives the price higher because they probably have a decent sized position, which puts the hurt on those shorters that haven't sold yet, or if they only sell a portion of their short position. It makes losses bigger in what they continue to hold. So it's kind of a fascinating little aspect of covering a bad position to me. The more you cover it, the worse it gets.
Now, I would not call this a monster rally. I mean, it was very short and sweet for GameStop. I'm looking at the article, and I'm thinking they didn't.
Well, when the price,
my train of thought.
when the price goes from 11 to 60 in a day or two, most people would probably identify that as a monster rally in that stock. It's not the whole market that they're talking about, but that stock. That's a hell of a rise.
There was a point I had.
Well, it'll come to you.
Okay.
Jaron, nah.
Nah.
Forgive me, I'm not exactly sure which point you're referring to. So if you can clarify that for me, I'd be grateful. Now, this type of activity, remember, institutional investors would look at this kind of activity and call it irrational. And it drives Wall Street nuts, which I admit I find amusing as hell. The analysts who, track companies, a company, are in shock because they've published, predictions showing GameStop is going to be losing $100 million a year every year going forward. They can't comprehend the price rising from 11 to 65. They just simply can't understand the little guy flipping their finger to Wall Street. I'll put it that way. So carrying this, out a little further, what do you think Wall Street does to the stock of a dying company that soars 6 times its original price? If you guessed they're shorting it, well, you're probably correct. Yes, they are shorting it again. And they'll make up some of their losses on the fallback, and individuals who were late to the party will be paying for it. A good example would be Citron Research, a company that lost 100% of its short position in 2021. You heard me correctly. They had a short position on GameStop and they lost 100% of the value. Well, interestingly, they haven't done anything with GameStop since, but this week the manager, Andrew Left, was interviewed by a Business Insider, and he stated that he had established another short position in GameStop. So he established the position after the prices surged. Now, while his position is not as large as what he held in 21, I'm pretty much guaranteed they're a hell of a lot more profitable. But it was interesting reading the article. You can tell he's still butthurt as hell from his 21 losses. In closing, he told Bazinga, the big guys are still doing okay. He noted that, was it Melvin Capital founder Gabe Plotkin, who now owns the Charlotte Hornets, by the way. He said, he mentioned that Plotkin owns the Charlotte Hornets, 0.72 that also lost a ton in 21. Steve Cohen owns the New York Mets. So he's talking about how well these guys have done since 21. And then he throws out the comment, I don't know what Boo Boo Kitty owns. Boo Boo Kitty.
Roaring Kitty.
Roaring Kitty. That's just pure butthurt right there. The dude hasn't forgotten.
It kind of reminds me of you and GMC.
Yeah,
or GM.
Exactly. Extremely butthurt over that.
That was the point I was going to make, but I had a better point with this, and I can't remember what the hell it was.
Yeah, Roaring Kitty was apparently unavailable for comment as well.
I don't think he exists.
We'll see. So, how does this year's shorting activity compare to 2021? Well, to be honest, $1 billion loss, $2 billion in losses. That's not chump change, but compared to 21, it's paltry.
Does that mean that someone made $1 billion? Or a lot of it just disappeared because of the trading?
Yes and no. I'll save that question.
Oh, jeez. I don't get any questions. Y'all get all yours answered. I get nothing.
Now, remember, same thing kind of happened in 2021, but instead of soaring to $65, the stock soared to $350-ish a share. So in 2021, the losses and the short positions by the hedge funds were far larger back then, more hedge funds involved. In addition, they didn't see this meme warfare coming. So they probably didn't react as quick. They thought it was just a quirk and a cute and would fade in a day. They didn't realize that the stock price would continue rising. So basically in 2021, it's estimated the hedge funds lost nearly $20 billion. The leader in that was Melvin Capital, which I referred to earlier. It was down 49% in a month. Losses exceeded $3 billion. So one hedge fund lost more in 2021 than all hedge funds have lost this week. That's pretty significant. I already mentioned Citron lost 100%. There was Light Street lost about 600 million. White Square just shut down. Didn't really publish their losses. They were just so severe the whole fund closed down. 0.72 Cohen's fund lost about $2.8 billion out of $19 billion in total fund value. Huge loss, massive loss. He still bought the Mets.
It didn't hurt him too bad.
Yeah. Maple Lane wasn't shorting, but they were writing options on it. Covering those options costed about $1.1 billion.
Can you go over that real fast? What that means?
Options are a right to buy or sell a stock at a contractual price. So I may want to buy or sell Apple at $100 6 months from now. So I can buy an option to do either one of those.
We mean either.
I can buy an option to buy,
or sell,
or I can buy an option to sell at $100 6 months from now.
Mm-hmm.
And I'll have to pay a premium for that. There'll be a upfront fee, but it gives me that right anytime over the next 6 months to do that.
And can you also sell that option or that right?
I can sell that option during that time.
So confusing, y'all.
So that's what Maple Lane was more involved in, and they took some on the chin. They didn't hedge it properly, so they took some of it as direct losses. So yes, the hedge funds did get hurt, at least to a small degree, but they're still positive on the year. And that kind of begs the question, the one that Ellen was alluding to earlier. If the hedge funds are losing, well, who profited? Great question.
Thank you.
If the game is rigged, if a major stock position is rigged, you oftentimes can get clues. You can't get conclusive evidence, but you can get clues from option trading, option volume. Now, as I just mentioned, option is just a right you can purchase to buy the stock or sell the stock in the future at a fixed price. So if I look at GameStop options.
And yes, GME is GameStop.
GME is GameStop. And again, I know there's a lot of numbers on this page, but I'm going to keep it simple. I want you to pay attention to two things. One, just these are 5 options for GameStop that expired on May 17th. And this price, oops, hold on, coughed up the wrong one. This is the one I want you to look at first. I've got a before and after. This is the before. So this is as of
the 17th.
Oh, geez. Did I get 2 of the same? I really shouldn't be allowed to have a show. No. This is right. I'm right.
We are professionals.
Yes, I'm right. Okay. As of May the 1st. I was looking here. Expiration. Duh. So this is as of May 1st, these options. And these are 5 options that expire on May 17th. Guess I need to bring that up.
Might be helpful.
Yeah.
We'll get there, people.
These are 5 options that expire on May 17th. So they've already expired, but this is as of May the 1st. You've got the company, GME, you've got the expiration date, the 17th, and then you've got the price at which you can buy the stock. Here is a $10, $10.50, $11, $11.50, $12.
What was it worth?
Here's the price. The ask price is what you would pay for it. So GameStop was selling at $11.32 roughly. And so to have the right to buy it on May the 1st, to buy it at $10 anytime up until May 17th, you would pay $1.77.
I'm telling you, this is a conspiracy theory
No, wait a minute.
thing. Okay.
So, and second thing I want you to look at is this volume. This is the total volume of all the options outstanding
May 1st.
as of May 1st. 2,660,000.
Somebody
Okay.
knows something.
Keep that number in mind. 2,600,000.
2,660,000.
So 10 days later, right before the announcement by Roaring Kitty, these options expire in a day. And here are the prices. $7.90. So if you bought this 10 days earlier, you paid $1.77. It's now worth $7.90. Okay.
This is May 10th. Yeah.
This is as of May 10th, a day or two before the announcement.
So whatever, before the announcement, somebody knew something was going to happen.
The volume has gone from 2.6 million and change.
To 3.6.
No, 36 million.
They knew it was going to happen.
Somebody, my point is, somebody knew something. There was some obscene volume in GameStop calls the week before the announcement.
I'm telling you, my theory is correct. I believe it.
And you've already seen, here's the price. You've already seen the price going up to about $20. So remember how I showed you that stock chart, how the volume was increasing days before? See, this little sliver is kind of what the normal volume was. And then, 2, 3, 4 days before the announcement, you see some relatively significant increases in volume. And then boom, the announcement. Somebody knew something.
Y'all go back to my theory a while back on the show. Tell me I'm wrong.
Now, keep in mind, does this prove anything? No.
Not
a damn thing.
Not definitely. No.
But it's damn curious. It's mighty damn curious. And, I used May the 1st. I was curious, is this like an abnormally low day? So previous 3 months, I took 10 or 15 random days, was looking up the volume. The volume almost always was between 3.5 and 4.5 million. By May 10th, the total volume was 36 million. Huge aberration, huge difference.
Can I restate my theory?
Yes.
My theory. When this happened the first time, Joe Biden got into office, he opened the borders up. All right. That's the first GameStop thing, right? A lot of people lost a lot of money. Somebody gained a bunch of money. Someone, somewhere. And now it's happened again right before the elections coming up, when our own FBI director, which I don't trust, we're not going to throw clay, is saying that we are in an existential threat in the United States. We don't know who's here. We don't know what their intentions are. And now it's happening again. Who is making money off this? Why? I mean, I was just, thinking earlier when you were talking about how they shorted, or Israel's stock market was shorted right before the attack, October 7th.
American Airlines, although not the company American Airlines, but all of the airline companies were shorted right before 9/11. Put options bought on them.
They had to make money somehow before to, I know it's not you, Melissa. No, I just think there is something more to this, that if you're just looking at it financially or from a perspective of an investor, I don't think you're seeing the whole picture. I think there is something nefarious going on.
So let's kind of look at that a little bit.
I'm the crazy person, so that's okay.
Yep. She's not crazy.
Yes.
She sees the world differently sometimes.
I do.
Has a unique perspective,
Mm-hmm.
which I oftentimes appreciate. I sometimes, we'll disagree, but nonetheless. So who's behind this? Tried to do a little digging in that. And I'm not a PI. So, but just searching around, found some rumors that the guy associated with Roaring Kitty sold it to an account called, and I don't know how to pronounce this correctly.
Schlums.
Well, that's a 0, not an O.
I know, but it's meant to be, yeah.
Yeah. So here's the account, Schlums. We'll just go with Schlums for lack of a better story.
Unusual activity. Gee, wonder what that would be.
Yeah. All of the posts and the tweets are gone, but I found this bit out there. And this is a post from Schlums, who posted some DM or an apparent DM to Roaring Kitty, where Schlum says, "Would you be interested in selling the account? Notice you haven't posted in quite a while. Remember, Roaring Kitty didn't post for 3 or 4 years. Would you be willing to take a serious offer?" Well, Roaring Kitty supposedly replied, "If you're serious, then yes, I would entertain an offer. My email is blah."
Okay. Time to come clean.
Hold on.
Yeah. Okay.
And then Schlum posted on May 13th, the day after the Roaring Kitty meme was put up, "Time to come clean."
He posted it, but it says, okay, April, May. Okay, sorry, I got
Yeah.
stuck there.
Now,
wow.
Polymarket, which is a website that takes bets, crypto bets on outcomes of events. So if you think Iran is going to launch a nuke or something, you can go to Polymarket, set up a market for it. Well, it posted, "Can confirm, proud to have helped facilitate the transaction." So this would lead you to think, Roaring Kitty did sell. Problem is, all the posts are gone. They've all vaporized, or they never existed. Now, Business Insider reported that Schlums was an experiment account conducted with a firm called Remelia Corporation.
Now, I have to say, I don't trust everything Business Insider reports.
True. But like I say, I'm not a private eye. I just was searching around and tried to track down what I could. And so
I get it.
Trying to give proper sites here and there. Well, this is the website to Remelia.org.
What is Rimagumi Gucci?
It is a Rimaguchi Gucci Digital Corporation official company website. My impression is that this is some sort of autonomous organization where it's basically I won't call it AI, but it's basically at least an advanced Ethereum construction or advanced computer
Hang on.
that can take inputs and respond.
Go ahead, talk again. Okay.
So wasn't able to find out a whole lot on Remilia, but supposedly this is the firm that bought or is backing or working through Schlum's. Now, Schlum's apparently has a reputation as I'll call it a conceptual artist and a crypto kind of account who was reportedly, involved in a stunt like blowing up a Lamborghini. That'll get some attention. Also, I've got to remind you that Gil, the original Roaring Kitty, has been silent and all of his other accounts are dead. Again, none of this proves anything, but make of that what you will. The Roaring Kitty account supposedly sold has come to life. All the other accounts are dead.
Right there. It was started January 2nd, 2024.
As a Nevada domestic limited liability company.
So it is a brand new company who
Yeah.
has digital innovation, enterprise solutions, and a global network, which is fascinating to me.
Yeah. So don't really know, who all really is behind this, who owns the Roaring Kitty website. Wasn't able to firmly establish that it was sold, that Gil still owns it, that Gil is operating it, that Schlum's is operating it. Just don't know. Make of it what you will. But just looking at the option trading volume, I wouldn't be surprised to see the SEC open an investigation. And yes, to me, it looks like someone rigged the game. So, any questions on GameStop? I hope all of that makes some sense, even though I can't give you firm specifics on who's behind it and who profited from it. But I hope all that makes some sense. Ellen is doing her little FBI imitation, tracking down whatever pieces she can.
And there is not a whole lot there.
Yeah.
It's, wow. There are 250 companies that have the same address. If that tells you anything.
Yeah, that's always interesting.
I will give you, let me email this to you.
Yeah. I'll actually try to do some more digging and see if I can come up with something else with Ellen's help, of course, for Tuesday night. No guarantees, but if we find something interesting, we will let you know.
So we're not making it up. I just emailed you just that screenshot. There are so many. I mean, I guess I could send you the email or the site. Hang on.
All right. If there are, no further questions on GameStop, that saga is not finished yet. So we'll probably, be offering some updates as things go through.
Check that is hilarious. All of the companies. Sorry, y'all, but this is actually pretty good. Not the first email I sent you, but the second.
It's going to take a minute for them to download. While we're waiting on that, let me go ahead and introduce some of the adiaphora for tonight.
Adiaphora?
Adiaphora. It's a Greek word for things indifferent. Just odds and ends. I just like adiaphora better. Hodgepodge. Here's the CPI for shelter in the U.S., the change.
Bigger. Sorry. Thank you.
Don't know that really is big enough to make much of a difference, but to 1982, where it was 100. So you can see the annual increase. Here's the COVID pandemic recession. Well, here at this point is where the Fed begins hiking. And what happened to the prices of housing after the Fed began hiking? I mean, it continues going almost exponential, which to me is fascinating because, you know, if you look at the effect of the hikes on housing, it's pretty much killed a lot of housing sales. But the prices have held up, even increasing recently. They dropped for a few months, as well as rent increasing. Now, analyzing this impact has become even more challenging because house sizes are apparently shrinking. So the prices are staying up, but the cost per square foot is increasing because the houses are smaller. Lot prices are, you know, still holding up or increasing slightly. We still see that, you know, existing home inventory is still thin. Current mortgage holders are not wanting to give up their low interest rates, so they're trying to make do. But just as far as anecdotal evidence, just driving around, I'm starting to see a lot more for sale signs. Now, I don't know if that's just a local phenomenon or if it's, you know, maybe is representative of what's going on nationwide. But I'm, you know, kind of wondering in the back of my mind, is the bad economy starting to take a toll on homeowners who've been laid off or who haven't received significant raises? You know, the people that are struggling to make ends meet? I don't know. But none of this that I see looks good to me. There's, you know, we've got a lot of data, but it's kind of contradictory. And so, you know, you try to make the pieces fit in some reasonable explanation, but doesn't matter how I explain it, it's not good. Welcome back. Carson finally caught back up and back on drunk speed. Not sure what drunk speed is, but
He says
we'll
that
allow it.
when he's been watching it for a while on fast, then he slows it back down to normal. It sounds like we're all drunk. Okay, start with that one.
This one.
Uh-huh.
All right. This is what Ellen
Quickly found out. So go to StreamYard and share that if you.
it is.
Oh, so you can see the address is 401 Ryland Street, 200A in Reno, Nevada. All right. And Krishna Okandahar is the managing member who lives elsewhere. Now, if you go to the next one I sent you, and you got to close that. Close. Don't do it. Maybe hit the things. Make it go away. There we go. There are 250 companies that have an address matching 401 Ryland Street, Suite 200A, Reno, Nevada. All right. We've got Foam Consulting. They're all foreign limited liability companies. Kinetic Concepts, Solilis Technology Group, Electric Vehicle Media, the Center at Advocate.
Let's not rate them all. Let's just pick out some of the better ones, like Zero Prostate Cancer.
Mainstay Engineering Group.
I don't know what MIG remediation is.
Ada Cleaning Services.
Yeah.
These are all foreign, either domestic or domestic. Most of them are foreign. Limited liability companies are foreign companies. There's a few domestic, but I would love to know who those agents are, if they're the same person.
Yeah, this is basically a mailbox, you know, maybe an attorney's office or something for who files the incorporation papers. I don't know. but
There's
that's
something sketchy
yeah, that's
about the whole
interesting.
thing.
That's a little different.
A little different. MIG, MIG remediation, as in the planes. Don't know.
Or as in the welding technique, you make a bad weld, you need to have it remediated.
What is MS
And
Shiro
it's actually MG, not MIG.
Venture Products, Dakota?
Yeah, don't know. All right. A week ago,
Interesting.
again, more interesting stuff. We don't have any firm answers, but more interesting stuff. How do you like a show that raises more questions than it gives you answers? Just wondering.
Well, I think that's a good thing. People should question everything.
A week ago, we talked about AI. And I say a week ago, we talked about it Tuesday. And many may have seen the movie about Alan Turing and his most noted accomplishment, building a computer, building the first computer that could break the German Enigma code. The movie was called The Imitation Game. But few understand the name or where the name came from. Do you know, Ellen?
I'm sorry. I'm
Where did the Imitation Game name come from?
Imitation Game.
Yeah, the movie about Alan Turing, computer guy. Duh.
Don't know that.
That's what a blank look looks like. Anyway,
sorry about that.
The Imitation Game was actually the name of a paper that Turing wrote in 50. He came up in the paper. He came up with a measure to test a computer's ability to exhibit intelligent behavior equivalent to that of an average human. And this test has become known as the Turing test. Well, Turing actually got the idea of the test from a parlor game called The Imitation Game. The way the parlor game would work is, you'd have a small party, a group of friends over, and you'd pick a man and a woman to go into another room. They were sequestered. Nobody could see or hear or whatever. The remaining group comes up with a series of questions that the two chosen people will answer, using a typewriter or a third party to write down the answers so that there's no direct communication from them. You can't discern their handwriting, for example. The goal is to determine which contestant is male and which contestant is female. Now, the male and the female contestants who are sequestered, additional level of complexity. They each want to reply as they imagine the other gender would. So the male is trying to imitate a female in his responses. The female is trying to imitate a male in her responses. The goal is to fool the others in the party. The parlor group is challenged to review the answers and discern the truth, try to pick out which is the male, which is the female. So the Turing test kind of takes that principle and applies it to computers. The test is whether or not a computer can successfully imitate a human to other humans. Can humans discern whether the replies it's given to a series of questions or problems originate from a human or a computer? Well, the latest iteration of ChatGPT 4.0 passed that standard. It has passed the Turing test. Just thought y'all would like to know.
Okay, we have an update.
We have an update. Ellen has an update.
Melissa just actually sent me a text about the Bosma Business Center, which is that address. And it only lists hang on. Oh, Where is it? Our tenants. There's just 3 of them.
And none of those were the ones that we mentioned.
Exactly.
So like I said, it's a mailbox.
That is, I'm sorry, but I'm finding all of this to support my theory. What about a wait, the Turing? Whatever.
Yes, we are talking about the Turing test, or what he described as the imitation game. What about a response from Pug? Responses from pugs are always welcome and greatly
You
appreciated.
better not take her stick again. No. Sorry. No, Chunk. You cannot take the stick you have.
The dogs are quarreling a little bit. Forgive us.
Mama's trying to tell Son to go away, and Son's like, but I want your stick. Sorry. I got off.
We'll go back to the video for proof. I actually first mentioned it this afternoon.
Before you were on.
Before I was on the air.
Yeah.
Other things going on in the world.
No, this is Chunk stuff.
I'm not even.
All right. And by the way, Green Bean, behave. Behave. Leave your mama alone and calm down.
That will never happen. As far as leaving mama alone.
What,
I think I think he's all generally pretty well behaved.
Oh, yeah, we do. And okay, we have to get through this too.
Whoops.
Because I totally forgot. Thank you, Melissa, for reminding me about things.
Yes.
Book club date.
Book club date.
Where am I going? Glasses. Dang nabbit glasses.
Today is the 18th.
Today is, and we have an update on. You can get it. I can't do 2 things. You can get it from Hoopla for free. You have to download the app. Apparently, you should. What Melissa says, you should create an account initially on the desktop, sign into the app on your phone, but you have to have a library card, and then it's free. So go to your local library, grab a library card, and you can get it totally for free, because we don't like making y'all pay for books that you don't have to pay for. We try to make it as free as possible for book club.
Yeah, if you've got a library card, you can access the book for free. If you don't have one, that should be relatively easy to get at your neighborhood library or something. Yeah, and they're free.
So I am thinking Wednesday, the 5th of June. That gives everybody enough time to kind of handle the things. Is that correct?
Yeah.
Or should we go further? Y'all let us know.
Yeah. How does Wednesday the 5th work for y'all? That's kind of the tentative date. That'll give you 3 weeks to get the book, or download it for free and read it.
Hoopla.com.
Yeah, we'll post that on the on our YouTube page and on Twitter. And so it'll be under the community questions, community comments page.
And it is God knows. Wolf is the last name, Facing the Beast.
Yeah. Naomi Wolf.
Is that it? Naomi Wolf. Yes. Melissa, is that a good day for you? Should we do Thursday instead? Y'all let us know.
Yeah, we know we won't find a day that's perfect for everybody, but Melissa's been to every book club, and if we can try to ensure that it's a good day, we would want to try to do it. It's convenient.
Thursdays are not good, so Wednesday's better. Okay, so let's do Wednesday on the 5th.
Ellen is making the notes here. In other news, the dollar. We've talked about the dollar. And the dollar has significance in your daily life because a lot of what you buy is imported. And as the dollar gets weaker, it increases the price of those foreign goods you buy, whether it's food, clothing, whatever, oil, gas, everything pretty much. Also, the weaker the dollar gets, the more expensive buying U.S. assets are. So the lower our exports and the less incentivized people are to buy U.S. Treasury bonds. Overseas investors are to buy U.S. Treasury bonds, which means we have less demand for U.S. Treasury bonds.
Which means no one wants our debt.
Which means no one wants our debt, which means the interest that the government has to pay to attract investors goes up.
Yep.
So there are a lot of repercussions that will impact you directly if the dollar continues to weaken. It's a kind of a big deal.
Mm-hmm.
Well, it had rallied a little bit in April due to CPI coming in rather high in April. And that sounds a little weird, but if inflation is higher, then the Federal Reserve is going to have to hike rates again. And higher interest rates are an attraction to foreign capital. So you have more foreign capital, buying U.S. bonds to get the higher interest rate, which ends up lowering interest rates. Anyway, kind of a fascinating balance there.
She wants to say hi.
Hello, Tallulah. Well, for this month, the downward trend has continued. China has announced it reduced its U.S. Treasury holdings. They dumped $22 billion worth of treasuries in February. They dumped another $8 billion in March. Well, this past month, they set a new all-time record for dumping treasuries. They dumped $53 billion in treasuries. This reduced China's treasury holdings to about 730 billion, somewhere around there, the lowest since 2008. And we haven't seen May's dump yet, so we don't know what it is. The big idea there is the BRICS nation, Brazil, Russia, India, China, South Africa, are all dumping the dollar and treasuries ever since Biden weaponized the dollar. Remember, Russia had 300 billion in reserves and Biden refused to allow them to access it. He's cut them off from doing international transactions using the SWIFT network, which is denominated in dollars. All sorts of things. He's weaponized the dollar against Russia. Well, a lot of countries see that. We've never done that before. We've never weaponized the dollar since it's been the reserve currency. And that's one thing that led to the U.S. being the reserve currency was most people felt like it could be trusted to pay its debts. And this, acceptance of the U.S. dollar and the U.S. as a business partner was really established in the War of 1812, when American citizens held loans from British banks. Well, with the war going on, they argued in courts that they shouldn't have to pay their debt. Went all the way to the Supreme Court. And the Supreme Court said, yes, they still have to pay their debt. It was taken in good faith, made in good faith, and they still are liable for it. Well, all of a sudden, the rest of the world knew that American jurisprudence could be trusted and that the law would apply equally, domestic or foreign. So that really helped spur the idea of doing trade in the U.S., international trade in the U.S., and the U.S. as being a faithful trade partner. Well, that's all kind of blown up the past couple of years.
What you mean we had credibility and we had people respected us and that kind of thing?
That kind of thing.
Yeah.
It gets even worse because even Belgium is dumping treasury bills. They dumped $22 billion in treasuries last month.
That's so not good.
I mean, even European nations are distancing themselves from the dollar and the U.S. economy.
That's really sad.
Yeah. But that's how things are getting. In other interesting news, and I'm going to have to set this up here because this actually has sound. And StreamYard makes me restart it in order for the sound to be heard from everybody. All right, let's listen to ECB, European Central Bank President Lagarde, who is proudly and excitedly announcing the launch of the Euro central bank digital currency.
No.
Yes, here she is.
The digital euro is on the move. Yesterday, the Governing Council of the ECB approved the opening of the preparation phase. It will be a journey, and we will walk the journey together with the legislator. All European institutions will be involved to make sure that Europe is equipped with the currency of the future. Cash is here to stay. You will have all options, cash and digital cash. So what does it mean for you? For consumers, it will be free and easy to use everywhere in the euro area. All of that, of course, is subject to the legislative process. Cash or digital, the choice will be yours.
How cool is that? She's the moment she said you will still be able to use cash, you know, maybe it's just me, but I translated it as this means your time to use cash is limited.
Very short.
Central bank digital currencies, they're coming.
No.
They're coming.
No. I don't accept it.
Yeah, it doesn't, can't say it's something I'm terribly excited about because in an instant, the central bank, the government will know everything you do, buy, sell, whatever.
They already do. They already just
And to extend that further, like you're seeing in China, they'll have the ability to cut off any transaction. If they don't want you buying more ammo, you won't be able to pay for it.
or Bibles.
If they don't want you buying more meat, if you've eaten too much meat this month, your access to other purchases can be cut off.
GB, hoard it. Hoard it all.
You know, social credit scores. They can create a digital currency that has a limited lifetime. You have to spend it in 6 weeks or it vaporizes.
Kind of like your time off.
So you can't save money. You have to spend it. If they want to encourage people to spend, they can not only encourage it, they can mandate it. It's just to individuals, it offers no real advantage over and above, say, credit cards, which government can in the U.S. access the information via a warrant, but
No, just FBI can just say, tell me people who bought this, this, or this. It did with Bank of America and lots of other banks.
yeah.
There you go.
You're not the only one, Melissa. You are not the only one. Talking dehydrator. And Carson, I want to raise my own animals. I want to raise my own food, or at least be able to.
They want little baby like miniature Highland cows. He's not going to be able to eat those. He just wants them as little like dogs running around the house.
Well, we'll see.
That's how hungry you get.
Might have other
He would
other
eat
animals.
Tallulah and Chunk before he would eat a Highland cow.
Those cows are damn cute. I've showed them on the show before. I won't do it again, but they're damn cute and sweet. They're just affable little beast. I love the damn things.
I mean, you do try to give them away every chance you get, the dogs.
No, I was talking about Highland cows.
Oh, I know. I'm just saying. Yeah, anyway. Oh, this one.
Another interesting thing. I don't know how many of y'all, have or remember, a month or two ago, we were talking about immigration, and I talked about how the Border Patrol, had a camp. It was overflowing. They had to release a bunch of people to, take in new people. And out of the tens of thousands that they released into the wild, aka the general US,
To the wild, wild world of the USA.
yeah, 5,000 of them had been diagnosed with tuberculosis. Tuberculosis, a disease that had been eliminated in the US up until a year or two ago. And I said then, you will hear of a tuberculosis outbreak before long. Well, here you go. With 14 cases, including one death, officials in Long Beach have now declared a tuberculosis outbreak public health emergency. Boom.
All of you in California, don't go to Long Beach.
Yeah.
I do remember you talking about that now. That just because.
Okay.
And he asked me, I was like, I don't remember right now. Now that you said it, and then Melissa was like, now I got to worry about that. I remember.
That's right.
And yeah, I actually had when I was 4, I had a false positive TB test. That never happens. And at least, we're letting people into the country who don't have the vaccines that we have for things that we've eliminated already. But we have to take vaccines that others are not. I should shut up.
No, you. Well, that's always possible.
Just saying.
Not that we don't have some strikes against us.
Thank you, YouTube. You're the best.
Yeah, we love you, YouTube.
Yet don't take no.
That's where the dog beach is.
No.
Might want to find a plan B. It's just unimaginable. We've got some of these diseases coming back into the country that we had eliminated previously. Anyway, just for your information, now you know. Also saw this one. We've talked about how the Great Reset. We've talked about that on numerous occasions, and about how they have several goals. You will own nothing and be happy. You'll never have to leave your house. Who needs a social life, or who needs to be able to get out and go to the park and walk your dog or whatever? You won't have to leave your house. You won't need a car. You will eat less meat. Bugs will be available.
Who's going to raise the bugs?
Bill Gates. Now, and people go, they can't control the meat I eat, whatever.
You sure about that?
You sure about that? Well, this is interesting. Saw this little video.
Where's this from?
Hold on.
I know you got to restart.
Yeah. Sorry, I have to click on some goofy ass buttons here.
You'll be all right. We'll get through it.
This is the mayor of New York City.
Eric Adams.
Giving a talk. And this is about 4 minutes, 13 seconds into his conversation. He's been talking about climate change and how, they're trying to positively impact the environment. Well, this is kind of a throwaway little comment that he makes, and thought y'all would find this interesting.
Can you blow it up? There we go.
And we have been destroying the one that sustains us based on the food that we have been consuming. I'm excited to announce that for the first time in our city's history, we're measuring just how much of an impact our food choices have on our emissions. First time we're doing this. We worked with the C40 Cities Climate Leadership Group, and I want to take my hat off to a great corporate partner, American Express and EcoData Lab, to put this new inventory together. And we're grateful for their partnership. And again, as I mentioned, my colleague across the pond.
Wait, food on emissions. Help me.
Meat. The big issue in climate change and the Great Reset is trying to get people to eat less meat. The idea is that cow farts produce methane, carbon dioxide, which, I've mentioned this before. I'll go ahead and throw it out again because, some people may not have seen the previous shows, but
so do mine. And what does that mean?
Well, the thing is, any any degradation of biomass, plants, vegetation produces methane. So a cow eats green grass, vegetation, degrades it. Byproduct of that is some methane. Well, if it just dies, spring, summer, fall comes, it starts dying. Well, it starts degrading. It produces methane. The cow doesn't change that. It moves it up a month or two or a few months, but over the course of a year, there is no net increase in CO2. Not only that, CO2 is not a poisonous gas. It's actually plant fertilizer.
Get plants.
And the planet over the last 20 years has grown, somewhere around 12% greener than it was before. Areas of desert have decreased due to the increasing greening of the world.
Because they need CO2 to absorb to live, and they give off oxygen.
Yes.
Yay.
And so in one sense, it's almost a self-regulating mechanism. It doesn't affect change immediately, but over time it does. Now, CO2 is roughly 0.04% of the atmosphere, the air we breathe. If that is cut in half, vegetation dies. Plain and simple, vegetation dies. In addition, Mother Nature, if you want to argue that CO2 is toxic, which there is no study that connects CO2 to any increase in temperature. There's been no mechanism proposed, much less accepted, that explains how CO2 leads to an increase in temperature. But if you hold that view, then you also have to recognize that nature produces 95% of all CO2. So you have to disregard the 95% produced by nature and blame mankind for all the change in temperature produced by the 5% or impacted by the remaining 5%.
If all humans only ate plants, okay, let's just say we slaughtered all the animals or got rid of them, they died, whatever, however it happens. Who create these emissions or whatever? We could not grow plants.
If CO2 dropped,
Yeah.
we couldn't.
We can't.
Not only that, if we ate plants, we'd produce methane. Wouldn't be the cows producing it. We'd be producing it.
Well, we still produce it, but it's not exactly the same.
The only way, when they talk about getting rid of carbon-based units that pollute the environment, the carbon-based unit they're talking about getting rid of is you. I've got videos, I haven't thrown them up, but of them talking about how, what do they do with all the useless humans? And, in terms of their inability to produce anything worthwhile. And, several of them argue that the planet's already overpopulated and it would be much more efficient if we reduced population. We talked about how, they believe we eat too much meat. We ought to decrease the amount of meat. Well, you see Adams in New York City starting to track, thanks to American Express and some others, track the volume of meat purchased, volume of different foods purchased.
Yeah, and who are these guys? Y'all can't see right now. Him looking at him like, this is what you got to do.
Yeah, I lost my train of thought,
Sorry.
but that's okay.
He was tracking the amount of meat purchased.
Yeah, the idea is that they won't tell you not to eat meat. What they will do is simply implement regulations or laws to limit the production, processing of meat, make it more and more expensive so that the average person, the poor, can't afford meat. Now, the rich, the elites, are still going to be able to have their lobster and Chateaubriand and veal, whatever else they want. but the poor and the middle class, it won't be available or as available. So we'll be the ones eating the bugs, not the rich people,
And Carson, yes.
not the elites. Let me say elites.
Silvopasture and rotational grazing. That is, if you have any interest in how to do that, Carbon Cowboys are great. You can find them on YouTube, on Netflix, lots of other places. They've got, there's a documentary. I highly suggest checking that out. Carbon Cowboys.
Yeah, and that's something we just kind of encourage. I mean, obviously, a lot of people are being hurt by inflation and food prices, even the inconsistent availability of some food at some times, which probably is going to continue, maybe even get worse over the next few years. So we encourage everybody to try to produce at least some of your own food. Even if you're in an apartment, have a balcony, grow some things in pots, whatever, and start, studying, learn about, this kind of self-sufficiency.
Yeah, go watch a week and a half ago, the Tuesday night with Jane Post. Tuesday Q&A.
Right.
What plants you can eat in your own backyard. I mean, what you can do to survive, what is medicinal, what is not medicinal, how to, I won't say procreate, that's not the right word, but forage for those things if you need them, if you need to survive.
Yeah. And, hopefully I'd be really happy if I was wrong on all this. If some of these trends didn't end up continuing, didn't end up panning out, had different results, whatever. I don't think anybody can look at what's happening, what has happened, and argue that there aren't significant trends in this direction. And my crystal ball is no better than anybody else's. I don't claim to be a perfect prophet. I've been following trends for 40 years. And I'm comfortable with my track record, as I'm prone to say. And I follow them like most nobody's business.
And of course, I watch all the congressional hearings like nobody's business.
Yeah.
That annoys the hell out of Clay, but
No,
it lets me. And last night was if you want some serious drama, go watch the congressional hearing from Friday night, the Oversight Committee.
Now, as we were talking about food,
Sorry,
it's all right. It's I hope I'm wrong. And if I'm wrong, at worst, you gain some additional knowledge and you have some fresher, healthier food, which is not a bad outcome either way. If things get worse as far as the availability of food, you've been able to mitigate some of that and, have the potential or the knowledge necessary to continue or extend that ability. So, I encourage people while we still have the opportunity and can easily access information and make subtle changes in our environment. Grow more potted plants, use part of your yard, whatever. Learn and study some of these things,
yeah,
improve your knowledge.
we're growing an avocado tree in our house right now.
Yeah, not that I'll ever really get it to produce many avocados.
You don't know, it takes years, but
yes,
we got it started.
It's a pretty plant.
And it's simple.
Yeah.
What did we do? We soaked it in water for an hour. Then we wrapped it in a wet paper towel.
Put it in a dark space
Put it in a baggie in a dark space for
4 weeks.
2 weeks.
Okay.
And then it should sprout. You should see a little sprout coming up, and then you just plant it.
Yep.
And then keep it watered and in the sun. It's pretty simple.
So, you need a male and female to make fruit.
But what I've learned is if you only have one stem off the avocado, that is the one sex. But if you have the two that come up, you got both.
And we have two.
We have two. this time. Last time we did not. And it was just like, there's just this little, like a big stick. And it was
Yeah.
like, what's going on? But now we've got leaves and that both of them, and
It's
looking
doing
good.
well. Yeah. We've got 2 strong stems coming up. So that's kind of interesting.
It was interesting. I was just like,
Yeah.
what is going on?
I was doing it just to have a nice big green plant and just see if I could grow it for the fun of it. Didn't really ever expect avocados out of it. Still don't. But
I do.
if I do get some avocados out of it, great.
You better love that baby.
Yeah.
Or it
And
won't produce a damn thing.
we've got some lemons growing as well.
Do we still?
Yeah. We had a mango, but it died off. May
haven't
try to get
tried.
one to restart one. Not that mangoes do really well up here, but it's just fun to try. So encourage y'all to explore in that regard.
Oh, and romaine lettuce. Like you get a romaine stalk or whatever. You get the lettuce off. You still have that like little bottom stalk in there.
The core.
Yeah, the core. You just take some toothpicks, put it in a glass, and let it sit in some water. It will grow roots. You can plant it.
And
it will
it'll grow
lettuce.
additional romaine lettuce. So there's a lot of little tricks you can do
Mm-hmm.
that are relatively simple, relatively easy, and might be fun for you.
Yeah, and the lemon trees was just like a random thing. We had a lemon. We used it for something. I took the seeds, I threw it in a pot and threw some dirt over it and watered it. And
Damned if it didn't grow.
we had 7 little lemon trees. It was kind of cool.
So
Give it a shot.
yep. Expand your knowledge. Have some fun doing it. Anybody have any questions on anything we've covered so far? Got the book club settled. It's going to be on June the 5th.
I'm about to, Carson. I was about to say, isn't it past my bedtime yet?
She's hung in there extremely well.
2 hours is like I'm good.
Yeah, 9 o'clock is like the cutoff time for a reason. It's not just trying to be courteous to you and make sure that we don't necessarily take up your whole night. Nope, there's other reasons behind.
Because I get exhausted.
Anyone that wants to talk food production, it's a conversation I always enjoy. We can do it again on one of these Tuesday nights. That's a great time for different questions and conversations. We may try to find somebody else who's interested in making a food or growing or a regenerative farming discussion.
Mm-hmm. You cannot grow tomatoes at the beach. I'm well aware of that because we have too many rats. And I don't mean like you see them. I just mean they sneak up in the middle of the night. It's a thing.
Yeah, the rotational grazing concepts. And there's some good information out there. That's the problem today, is that there's so much information out there. Not all of it is good or true or valuable. I see a lot of things on Instagram that, somebody's suggesting do this. And then, I'm reading through the 200 comments. I actually do that.
Or we've tried it.
Yeah. And, somebody brings up a very valid criticism as to why that's not a good idea or a good point. So, we almost suffer from an excess of information, but there is good information out there. You have to do a little work, a little digging, but it's interesting. It's fascinating. And I actually like getting my hands a little dirty, working in the dirt some, making things with my hands, seeing things grow. That's just intimately satisfactual to me. So
that's why we learned welding. Another little trick that, you might need at some point.
Might come in handy, that, ability to plasma cut metal. So, well, if there are no other questions, Ellen's given me it's past 9 o'clock signal.
Yeah. And so did Carson. He's like, wow, really? No, maybe we can do a little bit on how we have in more detail about how we've done some of the stuff that we've done and a few other things that we know about how to do things. And
we are always willing to have on, guests. So if y'all know of somebody, or, if there's something you'd like to talk about, let us know.
Do not be afraid to drop something in the comments
Yeah.
on any of the platforms and just let us know, or send us a DM on Twitter at Moffat on Money.
Or email us, moffatonmoney@gmail.com.
Yep.
And don't forget to hit the like and subscribe buttons, if you will. Kind of help us out a little bit.
Because we want to
on the YouTube,
bringing this stuff to you. Hopefully you enjoy it. I assume if
Yeah.
you're here, you do. And whenever we find information that we think is useful to you, we will share it, no matter what it is. If it is in the best thing for you as we see it, we'll share it.
And we really enjoy and have come to love our little family. And that's, really how we refer to, the people and the regulars on the show really are, just a great little family. We're privileged and proud to know you. Love you guys. Appreciate you guys. Thank you all for joining us. Even those on the replay crew, love you guys too. And, let us know comments, good, bad, and different ideas, good, bad, or indifferent. We love to hear from you.
Absolutely. Y'all have a great night.
That's going to do it for us. Our time is up. We thank you for yours.
Sweet dreams.
Good night, all.